Jacek Pochłopień, reprezentuję Grupę Infor i Dziennik Gazetę Prawną i będę miał przyjemność poprowadzić dzisiejsze wydarzenie. Hasło przewodnie tegoroczne to ku przesileniu i mam takie poczucie, proszę Państwa, że rozmawiamy o tym przesileniu na bardzo wielu płaszczyznach i będziemy rozmawiać i to dobrze. Zapraszam serdecznie na scenę panią Małgorzatę Rusewicz, prezes zarządu Izby Zarządzających Funduszami i Aktywami. Bardzo proszę.
Ja bardzo się cieszę, że tyle osób zostało. Mam nadzieję, że szybko pozostałe osoby też do nas dojdą. Wczoraj mieliśmy intensywny dzień i dużo rozmów na temat kierunku rozwoju rynku, tego co się dzieje, jeżeli chodzi o gospodarkę. Nie przestajemy na tym. Dzisiaj mamy w dalszej części dnia również takie merytoryczne i myślę, że mocno zastanawiające debaty, powiedziałabym, ale wcześniej chcielibyśmy rozpocząć od kwestii związanych z regulacjami, z tym, co nas dotyka na co dzień i popatrzeć na nie nie tylko z perspektywy krajowej, ale również z perspektywy europejskiej. I dlatego bardzo się cieszę and I would like to welcome Tanguy van der Werve, dyrektora zarządzającego FAMY. We are very pleased to have you here in Kazimierz with us. I rozmowę z nim poprowadzi Rafał Kozłowski z McKinsey i myślę, że to może być naprawdę ciekawa rozmowa i wiele się Państwo dowiecie, co się dzieje, jeżeli chodzi o fundusze inwestycyjne w Europie. So Tanguy, Rafał, the floor is yours.
Good morning.
Morning, Rafał.
Okay, let me start with a very general question. How are you today, Tanguy?
No, thank you. No, I'm fine. Extremely happy to be here and very impressed by your hospitality and the kindness of the staff of the chamber and also the colleagues who gave me a ride yesterday. So very grateful and happy to be here.
Okay, you are coming here with your European experience, but before we go to your European experience, to European regulations, to European issues, let me start with a question about Poland. You came yesterday. How did you find Poland?
Well, I saw the airport. I didn't get to see much of Warsaw. So the airport is just the airport.
Highways.
So, no, but I wish I could stay longer. I might come back actually at the end of August, visiting some friends, but. That's all I can say because all I saw was the airport and the hotel here.
And you saw highways from the airport to Kazimierz. It took you only 2 hours to come here. For us, this is a big issue because this is pretty new stuff to have highways in Poland still, especially connecting Kazimierz and the airport. Okay, Tanguy, so now let's go to the European space. There is a lot of issues, a lot of topics that are common from the European perspective and from the Polish perspective. There was the pandemic, we have a war in Ukraine, we have rising inflation, growing interest rates. I think we feel them much harder in Poland than still in the Eurozone, because the yield curves in the Eurozone did not go so much up if you compare them with Poland. We have digitalization, we have passive funds, ETFs. So what is on the mind of European fund managers, asset managers? What is on the mind of FAMA as of now?
Regarding the impact of all those externalities, for those of you who don't know FAMA, so we are the trade association representing the investment management industry in Europe. Our members are the associations of the national associations, and also we have 60 corporate members. And I mention it because we collect a lot of data from our national associations, which allows us to have a kind of European view of the fund industry at European level. And if we look at the recent situation, first, worth reminding that 2021 was a great year. I'm looking at the European average. It was a great year, all-time high net assets, if you consider UCITS and AIFs together. Net sales of UCITS were through the roof in 2021. Of course, 2022, different year for the reasons you mentioned. Also supply chain issues, COVID is still there, Ukraine, inflation, food security, energy security. Big outflows, but not everywhere. Big outflows in money market funds, that was a surprise, because you could have thought, okay, there is a flight to safety, so why MMF? But still big outflows. Bond funds, you know that better than many here in Poland. Equity funds did better in general, also due to the equity ETFs. So since March this year, big outflows, but equity ETF did, in relative terms, better than actively managed funds invested in equities. Likewise, mixed assets funds are doing better. If you look at the data that we get from our members, or Refinitiv, or Morningstar, Direct, and those kind of data vendors. So it's a mixed picture. Global funds are probably doing better as well. So I think that we really need to look at different asset classes, passive, not only index funds, but also ETF are probably a good place to be in these turbulent times.
Okay, so performance, and ETFs. So ETFs became important from the European perspective.
Well, if we look at total assets, UCITS assets, if you take index funds and ETFs, so the passive funds, it now represents 20% of the entire market, and it keeps growing. If you look at, again, the recent months, US government bonds ETF saw major inflows, at least for short duration ETFs. So there is also, of course, the currency exposure factor, but not everything is bleak. You do have pockets in the market which see inflows.
Mm-hmm. How do you see the success criteria for ETFs? Why are they growing?
Say it again?
Why are the ETFs growing?
Well, I think, cost and with downwards markets, people are looking more at cost. If the market is booming and you make 7 or 8% a year, it doesn't matter that much if you pay this or that basis points. But in a downwards market, you look at the cost and how much it impacts the performance. And obviously, ETFs are way cheaper, are easy to access, and you also have pressure from some supervisors and regulators in Europe, which feel that consumers should have better access to cheap and simple products, and ETFs are cheap and simple products.
So simplicity, easiness in access?
Yes, simplicity, access, and costs.
And costs. Okay, so this is about ETFs. Digitalization is, of course, making everything possible.
Yes, of course, it's we are not there yet. You have huge divergences between countries, but it's a trend. Now, robo-advice, it's still in its infancy. I mean, from what we see across Europe, there are lots of talkers about robo-advice, but it's not really picking up that fast. I think that people value human advice more than robo-advice. Robo-advice is a bit biased towards ETF, by the way. But it's a trend, but I wouldn't say it's a big trend for the time being. But digitalization, yes, it has everything to do with the customer experience. It's about really adding value and digitalization and ease of access. All our kids are using smartphones, and what does it mean in terms of distribution, in terms of quality enhancement, and those kind of things. So I think the winners of tomorrow will be those who realize how important digitalization is and how much value there is for customers. Now, this is as much a debate for us as it is for distributors.
Got it. Okay, so then let's return to Poland for a while. And I'm very curious about your perception of the Polish asset management market.
Well, I need to be very honest. I don't know much about the Polish market, so I don't want to be perceived as, giving lessons to anyone. But we do get the data from the chamber, so we have a good view of a kind of macro level about the market. And I think you received, some of you may have seen this newspaper.
Daily Parkiet.
Yes, and so, again, some of the comments I made during the interview with the journalist were based on the data we get from the chamber. So, for example, when I said that pension funds in Poland should invest more in investment funds. This is just based on the data that we got from the chamber. Now, I just got the explanation that actually there are absolutely no incentives in Poland for pension funds to invest in investment funds. So I can comment based on the data, but there must be a reason why this is so in Poland. But if I look at the Polish market and I compare it with the European average, a European average does not mean anything because it doesn't exist. It's just an average. The situation in Belgium is different from that in Germany and in Poland. But if I look at, if I make those kind of comparisons, what do we see? We see that obviously Polish market is very much a retail market. Households represent 54% of total fund ownership in Poland. This compares with 25% in Europe. So it's very retail. It's a domestic fund market. Many of your funds are domestic, not cross-border funds. If we look at households, 70% of their financial assets are held in cash and deposits. So the European average is 38%. Yeah? So it's only in Greece and Cyprus that it is higher than in Poland. It's not really an institutional market if we compare to the rest of Europe. Pension funds and insurance companies hold only 18% of investment funds. This compares with 41% in Europe. Yeah? And as I mentioned, the Polish pension funds do not hold many investment funds. It's only 1.4% in Poland compared to 44% in Europe on average. So I think that this may explain why, and also I was told over breakfast that it's mainly a fixed income market. So, if it's a domestic fund, retail and fixed income, in today's environment, I would say that, maybe this market is more vulnerable than others because fixed income is in the front line. Retail investors are risk averse. The nice thing with institutional investors is that every month they have new money to invest. Retail investors, they go for redemption and they have less money to invest because, they have to pay more for the energy and food. So I think that if markets like in the Netherlands, for example, which is dominated by institutional investors, are doing all in all better than more domestic and retail markets.
Okay, so we heard some statistics about Poland with some explanation. It's always good to know the perception of the other side when you look from the European perspective to Poland, but still Poland, belongs to the same zone, to the same European Union, with the very same set of regulations. And what is happening in Europe, in the European Parliament, in the European Commission, at one moment of time will become a law in Poland, either through implementation of European directives or through direct regulations that will be imposed in Poland. So you see this market is pretty different. So now being at regulations, what is your view, what we may expect from the European regulations, from the European Parliament, from the European Commission in the next quarters?
A lot. And you're right to say that, a lot emanates from Brussels and from the EU in terms of financial services. Obviously, the financial services sector, including asset management, is a highly regulated one. And most of the stuff, the laws that apply in your country, find their origin in Brussels. So if you want to influence things, you need to be active in Brussels. either directly or via a pharma or someone else, but this is absolutely key. And there are so many things, you know, if I look at the priorities of the European Commission, what do I see? Capital Markets Union, so developing market-based finance. The EU is lagging behind in terms of innovation, for example. So we need to finance innovation. This can only be done by the market. Banks are not financing innovation. They are too risk adverse. If you want to finance innovative companies, this is through the market. So we need more equity in the system. There is too much debt in the system, so we need more IPOs. So there will be a listing act, for example, a proposal that will be made at the end of December. Euro clearing, there is this willingness or intent by the Commission to be less dependent on UK-based CCPs. Insolvency laws, you will have an attempt to harmonize some big principles of insolvencies across the EU. Then, of course, you have the more immediate business, which is AFMD. AFMD is being reviewed. An agreement is about to be struck. Delegation is a big issue. Loan funds, I think there is an attempt to harmonize rules on loan funds. LTIF, European Long-Term Investment Funds, how to make it more attractive to retail investors. This is being finalized. A consolidated tape to gather all the trading data to allow the buy side, but to have a better view of the trading landscape. Solvency II is being finalized. This will change the weightings for equity holdings by insurance companies, which means that there will be more incentives for insurance companies to invest in equities. That's important for asset managers having their mandate. Sustainable finance is also very big, obviously. We have a lot happening in that space, you know, SFDR, CSRD, ESAP, ESG data providers and rating providers will probably be regulated at EU level. There will be a green bond standard. The MiFID II ESG preferences, this kicks in, I think, in August this year. The taxonomy keeps being developed. SFDR, Article 8, 9, many issues there. You know, the sequence was horrible, so you know, they made a mess out of this. But still, they are working on SFDR, see what can be fixed. So all this, you know, keeps us very, very busy. There is the retail investment strategy, so how to increase retail participation in markets. I told you about the fact that 70% of households in Poland households in Poland keep 72% of their financial assets in cash and deposits. How can you activate those people? How can you turn depositors into retail investors? So there is this retail investment strategy. I guess we'll be discussing this in a moment. You also have financial stability issues, concerns around financial stability and the investment management industry, around MMF, money market funds. The money market funds regulation will be reviewed in the coming year. There is the global agenda. It's about ensuring that there is convergence between the EU standards and the global one, especially in the field of sustainability reporting. The idea is really that companies across the world use more or less the same standards. There is obviously the Green Deal. Now, this is not financial services specific, but it's all about making sure that the EU is so-called climate neutral by 2050. This is the top priority of the Commission in the short, medium, and long term. It's all about the Green Deal. And to have a Green Deal, you need to have vibrant capital markets, hence the CMU. To have a Green Deal, to be climate neutral, the financial services industry has a role to play. That's the Sustainable Finance Action Plan. So it's all linked to the Green Deal. And maybe as a last point, but you know, I could go on. There is this open strategic autonomy concept of the Commission, of the EU. And here the idea is to recognize that we are too dependent. So we need to diversify. You know, we saw that with COVID and the supply chains. We see that now with Ukraine on food security. We see that with Russia and energy security. So it's developing a strategic autonomy on in key sectors. And when it comes to financial services, they came to the conclusion that we are too dependent on UK-based CCPs for euro clearing of derivatives. And so they will try to build more capacity in the EU, and the proposal is expected from the Commission in the coming 2 months.
Wow.
A lot.
Wow, a flood of regulations, compliance, lawyers, they will have a lot of jobs in the next quarters.
Lobbyists also. So,
Lobbyists. Okay, so when we are at lobbying, what is the agenda of EFAMA? What are the biggest issues that you deal with as a lobbyist as well?
well, maybe a few words about, about lobbying. I think for us, of course, we are in the business of interest representation and advocating the positions of our members to the institutions. Our objective is to be seen as a credible interlocutor by the EU institutions. We want to be seen as a partner of choice. We want to be seen as supporting the objectives of the Commission. Yeah? So it's all a question of positioning ourselves as a credible interlocutor. The Commission wants evidence. So if you want to be successful, you need to engage into what I call evidence-based advocacy. That's really key. And so we are not there for the short term. We are there for the long term. I mean, EFAMA exists since 1974. And if you want to have any influence in Brussels, whether we as EFAMA or you as the chamber or a corporate, you need to invest time and resources to develop this kind of trust-based relationship. So that's very important. What we also do, it's not only lobbying, by the way, we also provide services to our members. Some of you will be familiar with the EMT template or EET template. This is EFAMA. It's Findatex, chaired by EFAMA, and we are extremely active trying to develop those standards. So we are trying to shape the thinking of the Commission, and the earlier the better. If we are all collectively just standing there and waiting for things to happen, nothing will happen, and we need to be engaging a lot. So our agenda mirrors that of the Commission. So everything I just told you about CMU, sustainable finance, and retail investment strategy, we work on all those topics, and this is what we do. Of course, we need to anticipate the ideas to try and see whether we can be a source of ideas for the Commission. If you know about the Pan-European Personal Pension Product, the PEP, the PEP, EFAMA is behind the PEP. EFAMA was asking for a PEP 10 years ago. Yeah? We are also now already considering what we should be expecting from the new Commission. So we still have almost 2 years, but we need to be starting today about what our expectations would be from the new Commission. So we are also, it's not only about being reactive, but also being proactive. But our agenda mirrors that of the Commission.
Okay, so let's try to be more specific. You said that Poland is skewed toward retail investor base. So consumer protection, care about retail investors, this is also on the agenda of the European regulators, but also on EFAMA. And in Poland, when we speak about consumer protection, we usually think about also rulings of the Court of Justice of the European Union that are based on the so-called Consumer Directive from 1993. And we see that consumers becoming more and more stronger and stronger in relation with financial institutions. In Poland, this is especially seen among banks. So you mentioned that this retail space is also on the agenda of the European Commission. So can you please elaborate more what we can expect in terms of retail space and retail investors from European regulators?
No, absolutely. I think it's a key priority of this Commission, and especially of Commissioner McGuinness, who is the Irish European Commissioner in charge of financial services. It's all about increasing what they call increasing retail participation in capital markets. Too many people are not invested in capital markets. Too many people are just staying in cash and deposits. So they are losing money, at least in the Eurozone, where you have very high inflation and very low interest rates. So basically, you are losing purchasing power by just staying in cash. And, you know, let's face it, in many of our member states, many of our countries, the welfare state is retreating. And there are too few people who realize that, you know, when they will retire, they will have an issue. There are recent studies showing that 1 of 3 EU citizens are not financially resilient. So they are not able to withstand a financial shock. No, retirement will constitute such a shock. So, you know, it's a bit scary to realize that many people will, you know, soon find out by the time they retire that they cannot make ends meet once they have retired, because they were relying on the first pillar state pension, but this obviously will not be enough. So increasing retail participation is absolutely key. The Commission is looking at this, and they will start by issuing a so-called retail investment strategy in the first quarter of next year. So they are consulting heavily. We provided comments. Many of our members did as well. What is it likely to include? First, it's likely to include, you know, a more client-centric suitability assessment. So instead of, for the moment, under MiFID, you have a product suitability assessment, you know. Is this product suitable to you? Here, it will be more client-centric, you know. They will take a more holistic approach before recommending products. There will be improved disclosure regimes. For example, insurance products do not have the same regime as investment products. In terms of inducement, in terms of transparency, in terms of quality enhancements, all those things do not apply to IDD, so to insurance products. So the idea is to have also more digital disclosures. How can we use digital to make disclosures more relevant and timely? And can digital simplify? I mean, all those key information documents, all those things are hugely expensive for all of you. But, you know, how many retail investors read this anyway? So, and how can digital help? So they will be looking at this. And also the length, the timing, the format of all the disclosures will be reviewed. And they will also look at conflicts of interest from advisors in recommending these or that products. I think the good news is that more and more the Commission is talking in terms of consumer empowerment. It's not only consumer protection, because actually until now it was all about consumer protection, and you ended up overprotecting the consumers by giving them all those disclosures which are not read, not understood, and basically the result of this is that it puts off people. You know, people are not investing because it's too complex. So here it's also about consumer empowerment. How can we empower the consumers? And there is a recognition of the role of financial literacy in financial education. For many years, and I've been in that kind of lobbying business since 2000, so it has been 22 years, I can tell you that until recently, financial education was a no-go for the Commission. It was seen as an attempt by the industry, whether insurance, banks, stock exchanges, or asset management, an attempt to avoid more regulation, but not at all. To make the existing regulation work, we need more financial literacy. So, and this is being recognized by the Commission, which is a good thing. Now, I will get to inducement because I guess this is a key topic. If I look at what the Commission is working in the context of this retail investment strategy, it's all nice, but I'm convinced that this will not be enough, because you cannot really change or turn depositors into investors just out of Brussels. A lot needs to be done at the member states level. So forget about the EU. A lot needs to be done at the member states level. Where? In terms of taxation. Taxation is a main driver of investments, especially in pension products, including for retail. And there, this is not for the EU. In some countries, in Sweden, for example, the penetration rates of investment funds is very high. No, this is due to taxation. That was a decision made by the government of Sweden a long time ago. Pension policies, auto-enrollment, all those things. They have it in the UK. The Netherlands, huge pension funds market. Not so in my country, which is Belgium. Financial education, you know, there is not much the EU can do. So financial education, pension policies, and taxation, if we want more people to invest in capital markets, member states have a role to play. Now, on inducement, it's a very hot topic these days in Brussels, in the EU. We know that in the Netherlands and also in the UK, but the UK is no longer part of the EU, they have a fee-based system, whereas in the rest of Europe, it's commission-based. Now, the issue here is whether there should be a complete ban on inducement. You have some people arguing for a complete ban. I don't have a crystal ball, so I don't know whether you know, we will get it. I doubt it. I think that the Commission is too much aware that the distribution channels in many countries, including Poland, as I understand, but also my country, or France, Germany, Italy, Spain, it's dominated by banks and possibly insurance companies. And so, you know, if you cut off those channels, you are left with a huge advice gap because there is no one to give advice. So, you know, yet some ideas which are being discussed in Brussels is possibly a ban on inducement for so-called execution-only transactions where there is no advice. So why should the customer be charged for advice whereas there is no advice? So that's a question being discussed at the moment. But again, a complete ban is, I think, unlikely. Also, there is the reason why it's such a debate in Brussels is that there are many people, also in ESMA, by the way, in Paris, but at the Commission as well, that feel that the investors, the retail investors, are not getting good value for money. Although the fund costs have been decreasing over the years, if you compare active versus passive, you still see a big gap, not only in cost, but also in performance. You know, net of fees, very few actively managed funds do better than passives, than ETFs. So that's an issue. A big issue is that the Commission has realized that, I was talking earlier about simple and cheap products. Now, at the point of sale, those are hardly ever mentioned to the customers by the advisor, because the advisor has little incentive to promote investing in ETF. So this is what the Commission is looking at the moment. You know, there is this obligation in MiFID to act in the best interest of consumers. Now, are your advisors always acting in the best interest of customers? This is the question they are trying to to answer. So a ban on induced, complete ban unlikely, but something will need to be done. The Commission will need to be seen as doing something in that regard.
Consumer empowerment sounds even worse than consumer protection, from my perspective, and from most probably from the perspective of managers of asset management companies. Because more empowerment to consumers means difficult time for us. When you mentioned ETFs with better results than actively managed funds, then even the Commission will have the confirmation to this. So not a very, let's say, interesting overview for the future for the sector.
No, I should say that because you asked about the pharma, when it comes to inducement, you know, we have developed many arguments against a complete ban. So we are promoting the coexistence of both models. The models they have in the Netherlands works well in the Netherlands, but we are for the status quo for all the Commission-based advice countries. So we are not advocating for a change of the current regime. And there are many reasons why we should keep inducements. One of which is that, you know, many studies have shown that retail investors are not prepared to pay for advice. They are not prepared to pay for advice. So there is, and also, you know, if you ask for advice, you are the advisor, I'm the retail investor, you give me an advice, I pay for that, but I decide not to invest. So I will have paid for nothing. So I think there is limited demand from investors to get rid of the inducement system. What we may end up, I should have mentioned it, is more transparency, even more transparency. MiFID II brought about more transparency in terms of cost in the key information document. There might be further obligations regarding transparency, you know. How much do you get? How much the distributor get, and so on. I think a big issue is also for policymakers, and this is why it's so important for the Chamber, for EFAMA, and all of us to be monitoring all of this and to be active, to be engaged with the policymakers. But the big question is, you know, fine, if I buy a fund tomorrow in Belgium, I pay, say, 150 basis points a year, of which 60% or maybe 40% will go to the asset manager, and 60% of the entirety will go to the advisor. And as long as I hold the fund, now, if I hold it for 10 years, it means that for 10 years, 60% of the fee that will be taken out of the NAV will go to the advisor and the distributor, but the advice was given only twice, or only once. Mm-hmm. Also, looking at advice, there are discussions at the moment about the quality of the advice. You know, are you, as retail investors, are you happy, impressed by the quality of the advice you get from your financial advisors? Yeah. So quality advice, cost of advice. So we are saying, you know, advice is key, and advice tomorrow will be even more important because of ESG. There will be all these ESG preferences of customers. Retail investors have no clue. Nobody understands this taxonomy. What is a taxonomy? Sustainable investments, what does that mean? So I think the role of advisor will be more and more important. So if you want to increase retail participation in capital markets, you need to make sure that you have advisors. Of course, they need to be well trained. So, you know, we also have sustainability literacy. It's not only about financial literacy, it's about sustainability literacy, not only for investors, but also for advisors and indeed for asset managers. So there are many reasons to keep the current system, but we need to look at the quality of the advice being provided and the value for money. And you know, ESMA is thinking along the same lines. ESMA is promoting ETF and passive, for example, precisely because they feel that we need more simple and cheap products.
Thank you, Tanguy. We have run out of time, I suppose, so we will not touch upon the report of the European Court of Auditors that also recommended stricter regulations on inducements, but also additional actions toward single market, which finally means that in Poland we may expect some bigger competition from other players from other countries. That is actually happening because Poland is usually the biggest suspect if you consider your expansion strategy. But this is what we understand is also there. So many thanks for your thoughts. Many thanks for sharing with us the information of what is happening in Brussels, what is happening in the European Parliament. I think we have time for one question from the audience. So if there is anyone, there's no one. Oh, there's one question at the rear of the room.
Good morning, Sebastian Buczek from Quercus. Thank you for a very interesting presentation. May I have one question on fees? Because in our industry, everybody is focused on fees. Regulators, for example, clients, etc. And why is that in other financial institutions like banks or in non-banking sectors, nobody is taking such focus on fees like in our industry? Why is that? What is the reason? Why bank can charge a client any fee on banking account or a loan? And in our industry, the focus on fees is so great, so big.
Good question. Well, I think that in our industry, I think there is some focus on the cost of savings accounts in Europe. There is a bit more. There is a debate around those issues. I think in our industry, I think one of the reasons why there is so much focus is that people are comparing ETFs and actively managed funds, and then in terms of cost and in terms of performance, and then they're asking, okay, is it, do customers or retail investors get a good value for money by investing in actively managed funds? There is more transparency for investment funds, far less for insurance products. That's why I said that the Commission is looking into aligning the disclosure requirements for insurance products with the ones we have under MiFID. This is one of the arguments we use with the Commission, and with ESMA. Do not compare actively managed funds with passive funds. You should start comparing the performance of and the cost of actively managed funds with those of bank deposits. There is a huge opportunity cost in staying in cash. So I think that you are right. There is a bit less of a focus for banks. But this is changing because many people now realize, also in ESMA is working on inflation, and they realize that many products, including bank deposits, are vulnerable to inflation, less so for some investment funds. So what is likely to come also, Rafał, is a warning to be made to retail investors about the impact of inflation on the value of the products they invest in. I give just one example because we are short of time. Capital guaranteed products. It sounds very good these days, to attract retail investors, structured products with a guaranteed capital. But there is no obligation for the distributor or the advisor to mention that actually there is a huge inflation risk. If you buy a structured product, maturity 5 years, capital guarantee, yes, the capital guarantee, but you will lose purchasing power.
Okay, many thanks again, Tanguy. Have a good time in Poland, and see you soon. Thank you so much.
Thank you.